Good morning, students. We'll be starting with next chapter, that is liquidation of the companies. So before going on with the liquidation of companies introduction, so I want to ask you, ask you something, that what do you mean by company? So as you all know, company is an artificial person created by a law. So while creating, it is an artificial person and it is created by a law according to its own terms and conditions. Likewise, when a creation of company, there is some legal formalities to be followed, and at the time of winding up of a company, that is liquidation of the company, there will be some procedure that need to be followed for the purpose of ending the company, for the purpose of closing of the company. So here in liquidation, termination of legal existence of a company. So liquidation can be simply said as it is termination of legal existence of a company. Maybe some X company, it is coming to an end, there is a termination of that particular company. So in liquidation includes disposal of assets and payment of liabilities. So it includes what and all this liquidation includes. So first thing it includes is disposal of assets. Disposal of assets means there the assets will be there in the organization, maybe building, machinery, plant and that is furnitures, plants, etc. So that will be realized into cash. These assets will be realized into cash and payment of the liabilities will be made. So liabilities means those are the creditors of the company, debenture holders, preference shareholders. So for them the cash will be paid at the time of an ending, at the time of that is termination of the company. Assets will be disposed into cash and payments will be made to the liabilities. So next, coming on to the meaning of this liquidation. Liquidation or winding up of a company means termination of legal existence of a company. So a winding up of a legal existence of a company, which includes realization of assets, that is buildings, machinery, furniture, into cash. They will be converting the assets into cash and they will be settling the claim of the creditors. So who and all the creditors will be secured creditors, unsecured creditors will be, they will be settling for them. And distribution of its receipts to its members means if there is any balance after payment of all the creditors and preference shareholders, any value remaining will be paid to the equity share holders. So next, coming on to methods of liquidation. So there are three methods of liquidation. One is compulsory winding up, and second is voluntary winding up, and then the third one is winding up under the supervision of court. So what is this compulsory winding up means? So compulsory winding up takes place when a company is directed to close by an order of a court. So if the court orders the company to close it, to wind up the company, it is known as compulsory winding up. So what are all the reasons for this compulsory winding up? So first reason is if the company failed to submit the financial statement or to conduct the annual general meeting. So if the company fails to submit the financial statement asked by the court, then the court might take a decision for winding up of the company. And if the company does not commence its business within 1 year of registration, so the company will be taken and permission for opening of its business, and if it doesn't start the business within 1 year, so there the liquidation of the company existence, that is compulsory liquidation will come into existence by the court. If the number of the members fall below 2 in public company and 7 in case of private company. So if the members, if the members of the company becomes below 2 in case of public company, so public company is a government company, and below 7 in case of private company, so then the liquidation may occur. And then finally, if the company is not able to pay the liabilities, so if the liabilities of creditor holders cannot be paid by the company, and then at that time it is facing a severe losses, means at that time the liquidation may occur. So for the purpose of paying to liabilities, it is supposed to sell its assets and then they will be paying it for their liabilities. So next is voluntary winding up. So when the business of a company is closed by the members or the creditors voluntarily, out of the court order is called as voluntary winding up. So here the owners of the company or the members of the company come together and close the companies, or they voluntarily wind up the company because they may be suffering the continuous losses, so that cannot be served anymore. So why it can be called as voluntary winding up. So next, so here the types of voluntary winding up also can be of three types. One is members voluntarily winding up. So members means there are owners of the company. And then next is creditors voluntarily winding up. So creditors, if the creditors of the company decides that though this company is no more suitable for this, they can't pay the money, so at that time they take the decision of winding up of the company with the help of court or supervision of court. Next is winding up under the supervision of court. When the members of the company wants that the company should be liquidated under the supervision of court, they will file a petition to the court and the company will liquidate under the supervision of law. As I said earlier, when the creditor decides to wind up the company, they go under the supervision of law for the purpose of winding up of a company. So that are all the three types of liquidation. So next coming on to liquidator. So what is this liquidator? Who is this liquidator? So liquidator is a person who is appointed by members of the company or court for conducting the proceedings of liquidation. So the process of liquidation need to be taken place. So for that one person need to be appointed. So that person is known as liquidator. So in case of compulsory winding up, the court will appoint the liquidators. In kind of voluntary winding up, the members will appoint the liquidator. In case of winding up under the supervision of court, there the court will be the company or the court will be winding up, that court will be appointing the liquidator. So next coming on to functions of liquidator. So what are all the functions of liquidator? So first is supposed to realize the assets. So realize the assets means is supposed to convert the assets into cash. So first you will be realizing the assets. Next point, collection of money from the shareholders. If he needs any money at the end, the shareholders will be paying some money. Shareholder means that is equity shareholders will be paying some money for at that end of an liquidation. If it is not sufficient to pay its creditors or its preference shareholders, equity shareholders will be paying the money. So that time when equity shareholders pays the money, that at that time equity shareholders will be called as contributors also. And then the payment of liabilities. So first you will be realizing the assets, collecting the money from shareholders, and then you will pay for the liabilities of the company, that is creditors, debenture holders, etc., preference shareholders. So next finally, preparation of liquidator's final statement of account. So finally you will be preparing the liquidator's final statement of account. So these are all the functions of liquidator. So next coming on to liquidator's remuneration. So here the purpose of liquidation, the liquidator come for the company and he will start with his work. So here he need to be paid some percentage, right, as a kind of remuneration will be given for him. Here they will be giving two kinds of remuneration, means any one from this. So one is fixed percentage on assets realized. So you will pay a fixed percentage on assets realized. The amount of cash and bank balance, if any, should not be included. So here the assets will be realized or for some value. So for some value, the assets, that is buildings, furniture, will be realized. So on that value, the liquidators will be paid some percentage. If the assets realized is 5 lakh rupees, on 5 lakh, whatever the percentage is agreed upon will be paid to the liquidators. And one more point you are supposed to make sure here is the bank and cash balances will be not be taken into account while paying the liquidators remuneration. So until and unless it is decided prior itself. So next is, so and also liquidator is not eligible to receive any remuneration on calls in arrears and call money realized. So if there is any kind of calls in arrears or call money realized, you will not be getting the money on that, you will not be getting the remuneration on that calls in arrears and call money. So next, coming on to, first we talked about a percentage on assets realized, and also they will be paying that on a fixed percentage on payment made. So payment will be made to the creditors and creditors and preference shareholders. So at that time, if the interest if the remuneration is paid on the payments made to the creditor, so there are three types. They can be see here. They'll be calculating on three types. If the funds are sufficient to make payment to creditors and liquidators remuneration. So if the fund is available is sufficient for the purpose of paying creditors, think they have a 5 lakh and the payment of creditors is 4 lakh or something like that. At that time, the formula for that remuneration will be amount due to creditors. What is the amount payable to creditors multiplied by rate of commission. So rate of commission that is priorly decided. So this is when this amount is sufficient. Next, coming on to, if the funds are not sufficient to make payment to creditors. So for example, if the fund is not available properly for the purpose of paying to creditors, if the payment is of 5 lakh and the availability is of 3 lakh or like something like that, so at that time how will the remuneration will be calculated? Amount due to creditors multiplied by rate divided by 100 plus rate. So this formula will be utilized at that time. So next, coming on to, if the liquidators is required to be paid on a final balance payable to the shareholders. So here final balance payable to the shareholders means after paying secured creditors, after paying all these things, after paying secured creditors, after paying venture holders, preference shareholders, and after paying everything, finally the amount which is remaining will be paid to the equity shareholders, that is owners of the company. On that amount, the amount payable to equity shareholders, so if that value, if they are agreed to pay on that value, means the amount paid after the amount remaining after paying all kinds of liabilities, that amount will be taken multiplied by rate divided by 100 plus rate. So this is the formulas for calculating the remuneration of liquidator. So next, coming on to liquidator's final statement. So as I said earlier, the liquidator's work is for preparing the final statement. He is supposed to show how is the money realized and how much is the money paid. So here, while coming on to this, we will be preparing like this in the books of whatever the company which is given, liquidator's final statement of accounts, receipt side and payment side. And one more thing, to and by should not be mentioned here. To and by should not be mentioned here. So next, on the payment side, so what and all the payment will be made? The payment should be made according to this order itself. So first we will be paying to the secured creditors. So this secured creditors means they will be having the rights on assets or something like that. So this creditor will be giving worth of 1 lakh to the company, and he will be having an agreement or an right of particular assets. So this person will not give simply the 1 lakh rupees. He will be having right of any assets or something. He will be having agreement of that particular assets. So that time he will be called as secured creditors. First we will be paying for secured creditor holders. After realizing of money, the first thing we will be doing is we will be paying for the secured creditors. Next is liquidation expenses. So this liquidation expenses includes winding up of the company. So at the time of winding up of the company, there might be some stamp duties, there may be court amount payable. So that are all the liquidation expenses. Next we will be paying liquidators remuneration. So what and all we have calculated, that will be paid. So next, after that we will be paying for debenture holders. So outstanding interest on debenture. So if there is any outstanding, if any outstanding interest on debenture holders is there, means we will be paying that. Next is for debenture holders. First we will be paying the interest of outstanding. If there is an previous year interest which has not been paid by the company, that will be paid first. Next, the value of debenture, and then next we will be paying the preferential creditors. So next is unsecured creditors. Though they might not be having any kind of agreement, they will be getting only after payment of this, that is unsecured creditors. Next, if there is any kind of calls in advance to received, if the company has received any kind of calls in advance, means that has to be made. And then arrears of dividend, so arrears of preference dividend, if there is an arrears of preference dividends for 3 years 4 years, means you are supposed to pay first. Next is preference shareholders, after that we will be paying for preference shareholders. Finally, we will be paying for the equity shareholders. Any value remaining, how much ever the value is remaining, we will be paying for the equity shareholders. So next, coming on to the receipt side, means what and all we will realize. As usual, cash and bank is realized. So here cash and bank will not be realized, it is already in a realized form. So next is assets, which are what are on the assets will be realizing. So marketable securities will be sold and money will be received. Bills receivable, money will be received. Trade creditors, money will be received. Loans and advances, if anything, that will be received. So stock in trade, if there is any kind of stock in trade or work in progress, means that will be sold and the money will be received. If there land and buildings, plant and machinery, furniture and fixtures will be sold and received. Patents and trademarks will also be sold and received by the company. And if there is any kind of investment in the company, means on the assets, that will also be sold. So one more thing is goodwill will not be taken into consideration. Goodwill should not be taken into consideration. So that cannot be realized. Goodwill cannot be realized in a form of cash. That is an intangible assets that cannot be realized. And then surplus, if any, from the secured creditors. So here secured creditors is there, right? For them, for example, we'll be giving a building as an agreement for them. For building will be given as an right for them. So what happens? For payment, we'll be paying buildings worth is 5 lakh rupees. The payment of creditors, secured creditors is 4 lakh rupees. So remaining 1 lakh rupee will also be taken on a receipt side. And if there is any calls in arrears received at the time of liquidation will be considered. Amount received from calls on shares. So if any amount was not even made a call at the time of liquidation, will make a call and then receive the money and will be writing over here. So this is the liquidators final statements. So you have to see it properly. The payments, receipt side, any amount realized, and then payment. So it should be made according to this itself. The payment should be made according to this steps, according to these numbers itself. So hope you have been understood with this. This is an introduction class about and what is liquidation means, or what is remuneration, how is remuneration calculated for liquidator, and then the liquidator's final statement. So from the next class I'll be starting with the problems from this. For this, hope you have been understood with this. If any doubts, you can ask me. Thank you.